earnings week rolls on, mixed results from two tech giants worth over $4 trillion could be about to bolster the market's upswing or spoil the party. Apple and Amazon are the final mega caps to release results until Nvidia reports at the end of the month. Well, Apple marked a return to growth in its April to June period as iPhone revenue topped Wall Street targets. It helped cushion the bigger than expected sales decline in China. The upbeat results were lifted by the long-awaited arrival of new iPads. And there's lots to look forward to with the iPhone 16 series likely to be launched next month. Well, Apple is counting on a new suite of AI features to help spur demand for its latest devices. But it's unclear how the firm plans to generate revenue from the new features. Those uncertainties weighing on Apple shares in after hours, down about 0.2%. Worries about AI spending, also the main theme of Amazon's latest earnings report. The tech giant reported weaker than expected revenue for the second quarter and issued a disappointing forecast for the current period. It's suggesting the company is spending more than anticipated to catch up in the race to meet demand for AI services. The firm also continues to reckon with sluggish growth in its core retail business as competition heats up, but largely from discount sites such as Temu and Shein. Shares of Amazon now down about 5% in extended trading. We're also tracking Intel this morning. It missed its quarterly guidance and announced plans to cut 15% of its workforce. In extended trade, shares of the chip maker down 20%. Now, aside from stocks, it was a bruising day for the major indices. Concerns over the state of the U.S. economy were stoked by fresh manufacturing and jobs data, adding to recession fears. The Dow fell 1.2%, the S&P 500 dropped 1.4%, and the Nasdaq lost 2.3%. And to make sense of all this, let's bring in Keith Fitz-Gerald, principal at Fitz-Gerald Group. Keith, appreciate your time today. We saw there Wall Street really battered by the economic data. It has sparked concerns and questions that the Fed may be too late to cut rates, and now there are recession fears. How concerned should we be?
Well, there's a difference between being concerned and being worried. I think it's appropriate to be concerned because what you want to be doing is looking for opportunity. If you're worried, it's almost as if you're giving up the ghost. To me, Chairman Powell, missed the crisis in formation. They misjudged transitory. They haven't reacted appropriately. So it's logical to me that they're late to the party now.
Yeah. And so what's your advice then for investors if you think they're late to the party and we're seeing this declines and these recession fears?
There's three things that you want to focus on as an investor. Number one, forget the Fed because they're noise at this point. They're irrelevant. What you want to do is find world-class companies making must-have products and services with fortress-like balance sheets and products that consumers can't live without. And Apple today showed why is a great example and one of my favorites.
Yeah, speaking of Apple, we got those earnings. Investors not too happy based on the after-hours performance of the stock. But in your mind, Keith, what's your assessment of Apple's report card?
Well, I'm not sure that anybody who's unhappy with Apple today was watching the same earnings call or information that I was, because you've got a tremendous percentage of new buyers in wearables. You've got new buyers in iPads showing the market's not saturated. You've got capital expenditure for AI, tremendous redeployment of people. The company's just beginning to monetize that. So to me, we've been here before. We've seen this before. The company knows exactly what it's doing. And I'm very content with the action today. Not happy it got caught in the broader sell-off, but, these things happen.
Okay, so let's start with those AI offerings. The question that many have is, are Apple's AI features enough to bring in new people or at least spark more buying of iPhones? And do you think their AI offerings are enough to do that?
I do, and here's why. I think Wall Street doesn't quite yet understand what Apple's doing in true Apple fashion, just like when they released the iPhone. What they've done is they've changed the game. They've got a partially on-board technology. They're working with a variety of vendors. They're moving into things that are going to change the space. And at the same time, they're very keen to protect privacy, which of course is nothing similar to what any of the other generative AI groups are doing.
Yeah, I see. And let's talk about China as well, Keith, because that was another source of disappointment. Their sales fell there. They say it's partly because of the currency effect, but we know that China's economy is slowing. There's a lot of competition in China. How much of that concern is this for you?
Well, right now, if I'm looking just at what's happening in China, then obviously I am going to be a little concerned. But, the other thing, having spent a lot of time in mainland China, the mainland Chinese are very brand conscious. Beijing does not want them using Apple. They'd rather see them using homegrown products. So this is par for the course. What I'm focused on in part of the earnings call was Apple noted very specifically that the uptake of all of the devices in other regions grew very significantly. So that tells me Apple's management is well aware of the problem. They're well in tune with it. And more importantly, they're making steps already that are paying off in other parts of the world. So they're compensating.
Yeah. So, Keith, we're really rounding up this big tech earnings season. We saw those declines and those concerns among investors about the state of tech and the spending that's happening in AI. We're looking ahead to NVIDIA. That's the last one and the last big one, Keith. So what are you expecting from NVIDIA? What are you hoping to see?
Well, from NVIDIA, I want to see two things. I want to continue to see rollout of their brand new Blackwell technology. The next gen chips potentially are already all sold. So that's really good. I want to see operating margins, and I want to see continued forward execution on the vision. So are they maintaining margins? Are they maintaining their numbers? Are there any red flags that would cause them to go off mission? I'm not concerned about competition from AMD or any of the others, as you see in the headlines. To me, this is all about execution. This is about the CEO. Is he on task or not? That's going to be the crux of the call.
Yeah, and based on what we've seen in the tech earnings so far, Keith, that we're also seeing this rotation continue out, or at least the sell-off in big tech companies. Do you think that is going to continue?
Some of it is going to be related to the Fed. Some of it's going to be related to leverage. So there's the potential to consider, here that not all tech is the same. And we see that very clearly today. Amazon clearly did not meet muster. Apple did meet muster. So even within tech, you've got to pick your bets very, very carefully. So I think the companies that are going to struggle are going to be the ones like Intel that just cannot seem to get out of their own way. But companies like Apple, they're going to have some bumpy sailing, but they're going to recover. They're going to move well. Same with AMD, same with NVIDIA, same with Palantir, same with a lot of those kind of forward-thinking companies.
Yeah, so I guess some more divergence could be up ahead, Keith. Appreciate your insights today. Keith Fitz-Gerald, their principal at Fitz-Gerald Group. Southeast Asia's second largest bank, OCBC, has reported higher net profit in the second quarter, driven